Bitcoin, we believe, is a public good. This is financial superhighway. Everyone should have easy access to it and learn about it, because when they start with an ETF, they will learn more, and then they will want to do more in the way of self-custody and just get more involved into the community. And this is all deepening the liquidity of the market, which is that's a lot of what they're studying right now. How liquid is this market? Do we need derivatives? We'll wait for derivatives. They will use, I think, when one goes, though, the others will follow quickly. So I don't know if they'll wait another 6 to 9 months for derivatives. Maybe. I think someone will jump the gun before that, especially because it's become such a big campaign issue. And
in 2015, Cathie Wood and her innovative firm, ARK Invest, made a groundbreaking move by delving into the world of cryptocurrencies. When ARK Invest bought shares of Grayscale Bitcoin Trust, GBTC, that year, it was a significant turning point in the integration of Bitcoin into their ETFs. Cathie, who was constantly motivated by innovative tactics, looked to eminent economist Art Laffer for support in her economic claims. The market value of Bitcoin was under $6 billion at that point. After reading a thorough white paper written by Chris Barisi, Art Laffer proposed comparing the potential of Bitcoin to the roughly $4.5 trillion US monetary base. ARK's confidence in the future of Bitcoin was greatly increased by this comparison, and as a result, they increased their investment in GBTC from 1% of their portfolio to a considerable 10%. During the 2024 Bitcoin conference, Preston Pysh conducted an interview with Cathie and Art Laffer, who shared their early vision and offered valuable insights into current world monetary policy. As we go into this intriguing discussion and examine Cathie's changing tactics, as well as the wider ramifications for the financial industry, let's hear Cathie Wood's and Art Laffer's latest perspectives on the future of finance.
One of the things that, of course, President Trump is animated about is trade, and exactly the issue. So, and I know you do compare notes and everything. What is he doing? He must agree with you. He's a good businessman. Larry Fink's conversion was very important. That was a moment. Remember, he was denigrating Bitcoin for years, very focused on the environmental side of it. But how is it perceived? Well, the first thing that happened was Grayscale, because it kept its fee at 2%, donated a lot of share to all of us, right?
Why was that? That just doesn't make any sense why they kept it like that.
Let's just put it this way. We think it was a miscalculation. And the CEO, who I've known him for a very long time, he quit. I think, and now they're putting, if you look at what they did with Ether, they've introduced not only the conversion into the Grayscale trust into an Ethereum ETF, but also an Ether mini for 10% of it. So the cost there is 15 basis points. I think they're keeping, I don't know if they're keeping it at the rest at 2%. I don't know. I don't understand the strategy. But first donated a lot of share. Grew the market in terms of, beyond what Grayscale offered. So the education of 11 ETF providers vying for business at the same time, the education around that was tremendous. And you had most of the major asset management institutions involved, whereas, when we were in our early days, they thought we were using a marketing gimmick, or there was, always a reason not to consider what we believed was a new asset class. So first, donation of share to lots of other players, all of whom have educated. But the most interesting thing is it really has not hit yet, because the big platform, we call them wirehouses. So Morgan Stanley, Wells Fargo, Bank of America, Merrill Lynch, LPL would be an independent one, UBS. None has approved them for the platform. And this is all deepening the liquidity of the market, which is that's a lot of what they're studying right now. How liquid is this market? Do we need derivatives? We'll wait for derivatives. They will use, I think when one goes, though, the others will follow quickly. So I don't know if they'll wait another 6 to 9 months for derivatives. Maybe. I think someone will jump the gun before that, especially because it's become such a big campaign issue. And you've got, former President Trump, taking donations in crypto. Wow, that was surprising. But saying that he would guarantee the right to self-custody, very big in this community, right? Very, very, very big. Focusing on the minors and saying, yeah, America first. Yeah, we need them here. That's great. That was wonderful. And then, of course, what happened in Congress, the idea that the FIT 21, so Financial Innovation Technology of the 21st Century Act, FIT 21, got 76 or 78 Democratic votes in the House. Nobody expected that on Wall Street. Maybe that was becoming current wisdom, but that was big. That was big, I think, in terms of what I just said. The financial markets are waiting for cues to say, okay, it's okay to go. It's okay to go.
According to Cathie Wood, trade deficits indicate that President Trump believes the United States is not receiving a fair trade deal, particularly from nations like China. Trump, being a businessman, probably sees this simply. If the United States is losing money, it is buying more goods from other nations than it is selling. There is much disagreement over whether this point of thinking actually helps the economy. Trading deficits, according to many economists, can be a positive thing if they allow consumers to acquire more affordable goods and services in a complicated global trading system. However, Trump believes that protecting American companies from unfair international competition and balancing the budget are more important than anything else. Cathie also notes a noteworthy change in opinion. Larry Fink, who formerly opposed Bitcoin mostly because of environmental issues, has now modified his position. This change is significant because, in the financial community, Fink's viewpoint is highly respected. For more insights from Cathie Wood, let's delve back into the interview.
If you guys haven't read the code book, or you can get one thing that's really important about money, and really important, is anonymity.
Exactly.
You need anonymity, period. And if you don't have it, it becomes an instrument of the government to go into your private life if they can trace you back. And anonymity is reasonable, easy, and trivial to solve. Read the code book here. If you want to do it. I think I recommended it to you.
You didn't only recommend it to me. After our meeting, you sent me this copy.
Okay, I sent him the copy. You've got to understand the math, and you got to think of quantum security issues, encrypting, and all of that. But it is trivially easy using prime number series to be able to guarantee anonymity, where you and the other party have the code break, and there's no way it can ever be broken, period, done, all over. The winners now are the encoders, and you can do that with Bitcoin and make it happen.
Bitcoin, we believe, is a public good. This is financial superhighway. Everyone should have easy access to it and learn about it, because when they start with an ETF, they will learn more, and then they will want to do more in the way of self-custody and just get more involved into the community. Any fiduciary knows that if you introduce a new asset class into your asset allocation, the correlation of the returns associated with that asset class are going to be low relative to the other assets. So it's important to include it to increase returns per unit of risk. It's that low correlation that lowers the risk of the portfolio in general. So, that's how we've positioned what's going to happen near term. Longer term, I guess, we shall see. I think there are going to be share shifts in terms of this asset class. Given the kind of appreciation we expect, we think its share of asset allocation will go up fairly significantly. And we did a study on that as well, using, minimizing volatility, maximizing Sharpe ratio, all the things that traditional financial asset allocators look at. And right now, or in our published piece, we said, you should start out with at least 2.5% to 5%. And that is how a new asset class starts. I remember in the 70s, when I was very new to the business, real estate was a new asset class for pension funds. Then in the 80s and 90s, emerging markets became a new asset class because MSCI had basically said, you don't have to take a risk on what this country or that country. Here, we're going to bundle these. So it became actually a new asset class. And here we are, at the threshold of yet another new asset class, Bitcoin leading the charge. So I think the ramifications for Bitcoin are going to be quite significant, and it will take share, as will other crypto assets, I think, from traditional financial assets.
Cathie Wood views Bitcoin as a transformative public good, a financial superhighway that everyone should have access to and understand. She believes starting with an ETF can be a gateway for people to delve deeper into Bitcoin, eventually leading them to explore self-custody and active participation in the cryptocurrency community. According to Wood, it is advantageous to include a new asset class like Bitcoin in a portfolio, as its returns usually have no link with those of other assets. This low correlation may increase returns while lowering the total risk of the portfolio. She makes comparisons to earlier instances, such emerging markets in the 1980s and 90s and real estate in the 1970s, which began as novel asset classes and eventually garnered substantial shares in portfolios. She forecasts that Bitcoin, along with other cryptocurrencies, will see a substantial increase in its share of asset allocation over time. According to her analysis, starting with an allocation of 2.5% to 5% is typical for new asset classes, and Bitcoin is poised to make a major impact. Through her insights, Cathie Wood presents a convincing picture for Bitcoin's role as a key asset class going forward. Her viewpoint highlights the ways in which Bitcoin might offer new opportunities and lower risk, thereby transforming typical financial portfolios. It's evident that Bitcoin's significance is only getting started as we investigate the constantly changing cryptocurrency scene. Until next time, happy investing.